Students, welcome to Rohan Commerce Circle. So today we are going to start with complex journal entries. That is, we have reached part 3 of journal entries. But before starting the journal entries, today I would like to explain you the concept of accrual basis of accounting. What is this accrual concept? This accrual concept explains that we have to record the transactions when they occur. It does not have any relation with cash, that is not when the cash is received or paid. इसका मतलब क्या है स्टूडेंट्स? एक्रूरल कंसेप्ट जो है ये हमको बोलता है कि वी हैव टू रिकॉर्ड द ट्रांजैक्शंस व्हेन दे ऑकर, मतलब जब ट्रांजैक्शंस होता है तभी हमको उसको लिखना पड़ेगा, तभी हमको उसको रिकॉर्ड करना पड़ेगा। कैश आए या गए उसको देखने का जरूरत नहीं है, ट्रांजैक्शन हुआ मतलब हमको उसको रिकॉर्ड करना है। तो लेट अस सी वन एग्जांपल फॉर दैट, दैट इज goods sold to P on credit, rupees 5,000. So in this case, when we are just selling the goods to P on credit, that means we are giving him credit. That means he is our debtor, right? So in this case, there is no inflow or outflow of cash. Cash आ भी नहीं रहा है, cash जा भी नहीं रहा है. What happens is we are just selling the goods to him. So the transaction is occurred over here. So this is an accrual concept. And what will be the journal entry, students? The journal entry will be goods sold, and there are two aspects. One is goods sold and another is P. So P is our debtor who is asset over here. So he will be debited. We all know about the dealer rule. When what happens in case of a dealer rule, when asset increases we debit it, right? And goods sold, it is sales. So what is happening over here? Because the goods are asset, goods are decreasing, so asset is decreasing, so we are crediting it, right? So in this case it will be P's account debit to sales account. P is our debtor, so P's account debit to sales, goods are going out, so to sales account. Now we will be coming to some important terms before doing the journals. What are those terms, students? First is prepaid or paid in advance. Paid in advance means we have already paid it. That is an asset for us. Okay. Now the second is outstanding. Outstanding means yet to be paid. That means we have to pay it, right? So that is a liability for us. Next is interest on capital. What is interest on capital, students? It's an expense for the business which the business have to pay to its owners, right? So the interest on capital is obviously an expense. Why it's an expense? देखो, अगर कोई भी ओनर बिजनेस में कैपिटल इन्वेस्ट करता है तो उस कैपिटल का एक इंटरेस्ट बनता है. So that interest the business have to pay to his owners, because I have already told you that business and business owners are two different entities, right? So the business have to pay the interest to its owners, and it is always adjusted in the balance sheet. Next is interest on drawings. What are interest on drawings? Now, what are drawings, students? First, let me explain you what are drawings. Drawings are actually the money which is taken by the business owner for his or her private use, right? So that is drawings. So if somebody is taking money, if the owner is taking money for his private use, that means he have to give interest to its business, right? So that is called as interest on drawings. So interest on drawings is an income for the company, as the owner will pay the interest for taking drawings from the business. It will also be adjusted in the balance sheet. That means when anybody is taking, that means the owner is taking money, he will have to pay the interest. Mind it, he will have to pay the interest on the drawings, and that is an asset for the company. So that will also be adjusted in the balance. Students, let us start with the journal entries. So what will be the journal entries? So first journal entry is interest due on bank loan but not paid. What is interest due on bank loan? Means we have taken a loan from the bank and the interest we have to pay it, right? So there are two things over here. One is interest on bank loan, that we have to pay it, that means it is our expense. Okay, so it is our expense. So it will be debited. As the expense increases, we have to debit it. Students, this is a dealer rule. I have already made one video. You can click on the I button and see the dealer rule if you have not seen it. And next one is outstanding interest. Students, when we have to pay something which is due, an outstanding interest is created. An outstanding interest account is created, which is a liability for us. So this liability is also increasing. So the liability is increasing means as the liability is increasing, we are just doing it credit. So what will be the journal in this case? The journal will be interest on bank loan account debit to outstanding interest account. Okay, so I am writing it down. Interest on bank loan account debit, to outstanding interest account. Okay, so how much it was? It was rupees 10,000. Okay, so what will be the narration in this case? The narration will be being the interest on bank loan due. Next will be coming to the next journal entry, that is the accrued income. That is the accrued income. Okay, accrued income means the income which we have already gained but not received. Okay, that means it is the accumulated income. Okay, so this accumulated income is on interest. We have gained the interest but not received it. Right? Suppose we have worked for some months and we have received the salary, we have gained the salary but not received it. So that is the accrued income. Okay, so in this case we have already, the interest is already due but it is not being received. So that is accrued interest. Okay, so this accrued interest is an asset for us. So as it is an asset, so we have to, the asset is increasing in this case. So as the asset is increasing, we are just debiting it, right? And interest is a revenue or income, right? So as the revenue or income is increasing, we have to credit it. It's a very simple thing that as we are increasing the interest, it's an income. So income is increasing, that means we are crediting it. So what will be the journal entry? The journal entry will be accrued interest account debit to interest account. Accrued interest account debit to interest account. Okay, students. So accrued interest account debit, asset is increasing, so accrued interest account debit to interest account, income is also increasing, so we are just doing it credit. How much it was? It was rupees 6,000. Okay, what will be the narration over here? The narration will be being the interest accrued. Okay, the next one is prepaid rent. What is prepaid means? I have already told you. Prepaid means we have already paid the rent. That is prepaid rent, right? So this prepaid rent is an asset for us, right, students? This prepaid rent is an asset for us. So as the asset increases, students, what do? We debit it, right? So prepaid rent is an asset. So prepaid rent account debit, and what is going out in this case, students? Cash is also an asset, so cash is decreasing. So as the cash is decreasing, we have to credit it, right? So to cash account. So cash is decreasing, so we are just doing it credit. So to cash account, how much it was? Rupees 15,000. Okay, so what will be the narration? The narration will be being the rent paid in advance. Okay, being the rent paid in advance. Then the last, this fourth one will be salary outstanding rupees 20,000. So what is the means of outstanding? It's the opposite of prepaid. Outstanding means we have to pay it. So as we have to pay it, so outstanding salary, it's a liability for our students. So as it is a liability, it will be credited. Since the liability is increasing in this case, that means the salary, outstanding salary, we have to pay it, right? So it's a liability. So liability is increasing. So as the liability is increasing, we have to credit it. And the salary is an expense, right? So we have to pay the salary. So salary is an expense in this case, right, students? So salary will be debited because the expense is increasing in this case. So as the expense is increasing, it will be debited. So what will be the journal in this case? The journal will be salary account debit, salary account debit to outstanding salary account. To outstanding salary account debit to outstanding salary account. Salary account is an expense, so it is increasing, so we are debiting it, and outstanding salary is a liability, so the liability is increasing, so we are doing it credit, right? So how much it was? It was rupees 20,000. So what will be the narration in this case, students? The narration will be being the salary outstanding. Okay. So I hope this is clear. Now we will be coming to the next journal. We will be looking into this journal, that is allowed 10% interest on capital of rupees 50,000. Now students, what is interest on capitals? Interest on capital is a expense which I have to pay, sorry, the business have to pay to its owners. Already I have explained you this. So now interest on capital is an expense, right? So the expense is increasing, so we have to debit it, right? And from where it is increasing? It is increasing from capital. So capital is the liability, students. Capital is also increasing. When interest on capital is increasing, the capital is a liability which is increasing, right? So as the liability is increasing in this case, so what we have to do, since the interest on capital is generally adjusted in the balance sheet, so we are taking, it's not adjusted in cash, it's adjusted with the capital in the balance sheet, students. So the liability is increasing in this case. So as the liability is increasing, we have to credit it. So fifth number is interest on capital account debit to capital account. Okay. Now it's 10% on 50,000. Okay. So let me make the calculation over here. 10% of 50,000 will be, it will be, if I am doing 10% means 10 by 100, off means multiply. Okay. So I am just cutting it down, it's rupees 5,000. Okay. So rupees 5,000 will be debit and rupees 5,000 will be credit. So what will be the journal? Being the interest on capital due. Okay. Next one is interest on drawing. Interest on drawing is just the opposite of interest on capital, students. So interest on drawings means we are getting the interest from the owners, already I have explained it. So that is an income for us. As the interest on capital is an expense, the interest on drawings will be an income. I hope you are understanding this part. So interest on drawing is an income. Why it is an income? Because we are getting it from the business owners, right? they have taken the money for their private use, that is drawings, and the interest on drawings is the drawings which they have taken, we are taking, that means the business is taking interest for that drawings which is taken. So basically there are two aspects, one is interest on drawing, that is an income is increasing, and drawings is also increasing in this case, right? So the two aspects, income is increasing, so when the income increases we have to credit it, and the drawings is increasing, so the drawings increases, we have to debit it, right? So drawings account debit, drawings account debit to interest on income, interest on drawing, interest on drawings accounts. Okay, how much it was? It was rupees 6,000. So the narration will be being the interest on drawing, being the interest on drawings charged. Okay, so I hope these journals are clear to you. We will come to further complex journal in our next video. And students, if you have understood this video, I would like to say you to subscribe my channel, because you are not subscribing it. You are seeing it but not subscribing. I would like to subscribe my channel, and you have to give a like, share and comment below. And if you have any kind of doubt, you can comment below, and I will give my Instagram ID also. You can text me personally, I will comment you over there. Thank you so much for watching this video. Thank you, students.